There's a mega shift, John. There's a mega shift. Before what we saw was people would sit down and they would have more time to process. What we see now is people want more like squawk audio, lunchable content. Okay. There's really a paradox at the heart of AI search. It makes information feel more abundant and more authoritative at the same time, but there's no underlying quality check on it, right? You read whatever's on there and then you take it for granted. You take it as the reality, right?
My name is John Lai from Clive Capital, where we help high earners like you invest outside of the stock market to passively achieve long-term wealth generation through superior risk-adjusted returns, long-term passive income or cash flow, and tax benefits. Together with you, we're investing in over 1,000 multifamily apartments under renovations, nearly 100 single-family rental homes under development, more than 350,000 square feet of industrial real estate, over $700,000 of private loans, nearly 40 oil and gas wells, and we've expanded to other asset classes as well, with the end goal of helping our investors, you, create diversified, balanced portfolios. Before we begin, a quick disclaimer as always, we're not financial advisors. All investments are subject to risks, so please consult your CPA and your attorney and do your due diligence before making any financial decisions. I'm your host again, John Lai, and welcome to today's episode, How AI Search is Reshaping Financial Media and What Investors Need to Know. Robert Checchia is the CFO of Benzinga, a leading financial media platform serving millions of investors with market data, news, and research. In this episode, Robert will break down how AI search is transforming the financial information landscape and why understanding this shift will give you an edge as an investor. We'll explore the following topics today: why trust in financial media is becoming more valuable and not less, how AI-generated noise is making it harder to find reliable sources, how savvy investors can cut through the noise and make smarter decisions. For those of us in the audience who don't know your background, Robert, could you give our audience a brief background on your journey in becoming the CFO of Benzinga and how you're seeing AI disruption play out in financial media today?
Absolutely, absolutely. First, John, it's an honor and a pleasure to be here. I've always looked up and saw the work, so it's really cool for the invite. Thank you. I do appreciate it. Okay. Robert Checchia, I've worked in finance, corporate finance roles for 20 years now, 20 plus years, always in either PE-backed companies, right? I worked with 5 private equity groups at this point through in different roles, but always within the finance function, right? Financial planning, business development, M&A, things like that. And I also spent about 8 to 10 years doing consulting and M&A advisory at investment banks. So I've been a little bit on both sides. Now I'm back. I've been at Benzinga for 3 years now, working as the CFO here. And it's really interesting to come back after being on the other side, helping to get deals done and finding that right balance of things within how much am I managing towards upwards, towards our financial sponsors and reporting and getting things done, and how much are we actually getting rolling up the sleeves and acting as an operator? Because I think that's a big difference that I've tried to implement as a CFO here is really not being just a reporting or anything like that. It's really how do I grow this business, right? And so in that function, there's been a lot of development in sales, marketing, even HR, internal functions. So there's a lot going on here. And I feel like I'm very proud that I'm not the stereotypical CFO accountant that gets in here. It's really, I'm proud to say I'm an operator today within Benzinga.
That's great. Thank you for that background. Let's start with the title. And AI is all the rage in the news. When we say AI is reshaping financial media, what specific problems or solutions are you thinking that Benzinga can solve using AI or possibly solve because of AI?
Yeah, I think just you started mentioning how AI search really is making trust more valuable, right? Because there's really a paradox at the heart of AI search. It makes information feel more abundant and more authoritative at the same time, but there's no underlying quality check on it, right? You read whatever's on there and then you take it for granted. You take it as the reality, right? When a chatbot gives you a confident answer about a stock or a public Fed decision or anything like that, there's no byline, there's no editorial review, there's no accountability towards it, right? So the systems that can provide verified, time-stamped, source-attributed financial intelligence are actually becoming scarcer and therefore more valuable. And that's where Benzinga really steps in. Okay, so Benzinga we started in 2009, but started really as covering financial markets in the US. That's how we started. And the goal was to level the playing field between institutional and retail investors. Okay, so that was the moat. Today we have 100 plus journalists and financial analysts within Benzinga that curate, compile, analyze, review, and produce unique content, right? So that's really the heart of Benzinga. And then we distribute that content through different manners. One of them is through our B2B2C API. So when you go into a brokerage firm, that's how we provide the data. Then the brokerage provides to their audience. We do have subscriptions products where you can directly access all our produced content. Just calling it out here, one is Benzinga Pro, which is really cool. That's the crown jewel here, where you have institutional grade information there, and then you can make quickly timely decisions on moving news within the market. And then the third one is it's not just coverage, it's really the moat expanded to financial education. Okay, so within our website there's a lot revolving around the audience here. I know is more savvy, but it's also what is a mortgage, how do these work, and then we cover what are the best mortgage companies today, what's the best credit card companies, car loans, things like that, insurance. So there's a big piece around financial education for us to give back and help educate the public. So that's a big part of it too. But in terms of AI, it's really making the producers, the analysts of content more valuable and not the opposite, right? It's you got to be able to cut through the noise, right? And we really pride ourselves in being that quality content provider. And you can see our content produced and distributed in many different ways.
That's great. Thank you for that. I remember growing up, and when I was looking for investing news, either reading newspapers like Wall Street Journal, Barron's, or looking at, for example, Yahoo Finance. And that's 10, 15 years ago. What's broken about how retail investors currently find and evaluate financial information today? And are people where they're reading AI generated content sometimes?
Yeah, no, great. That's a great question. And that difference was really a competitive advantage, right? That institutional investors had back in the day. Today, that playing field has been leveled a lot. Today, I think that it's you have to have the quality data there, right? You have to have the timeliness, and where there's also it's not white, black or white. There's different shades of the type of retail investors, right? There's from the basic, oh, I just want to get some picks really chewed up, spoon fed, and there's others that we call even prosumers that they do all their own trading, all their own research, they spend a lot of time. So we try to attend to really a broader audience, and for everyone in that spectrum, we find a tool or something that we can deliver there. So I think that today it's become more important to really differentiate and give opinionated content based on data than just provide random numbers or anything that they can just grab and scrape off the internet. I think also a big point that we bring is we're talking about AI still. We use AI intensively. Okay, so we started as a news provider, data provider, but we today it started from we're transitioning from a financial media business to a fintech. Okay, and that's not just lip service. Our new CEO is an engineer, so he comes from this background. He's been in this space, but he's an active engineer. So we really apply all these and deploy these new developments from AI internally, and we put our money where our mouth is. So things that we didn't have before. We've developed a massive AI, machine learning, and data science team over the last 2-3 years. And we're very proud to say we haven't fired anyone. We haven't done any layoffs because of AI. We use it to increase our productivity internally. Okay, build new products, review what we have that can be productized, packaged, and sold in the market to make better investment decisions. But we use a lot of AI within our internal processes. But the bar just was raised, John. So instead of writers or analysis or anything being done, whatever, once a day, now it has to be 5 times, 10 times a day because of AI, right? So very strong in that sense. But none of our pieces of content are produced using AI without review, without thorough review and analysis. And we have multiple layers within our news desk team to verify everything that's there because the credibility is what we sell, right? So we can't afford to have a mistake based on hallucination or anything like that on AI.
Yep, I think that makes sense. Next set of questions is about how AI search works differently than traditional search. So there are a number of search engines out there, and more people are using AI, starting with AI LLMs as the search tool of record. rather than going to Google. Do you think that AI search is better, worse than traditional search? And then how do you optimize for that? Like, how do you optimize for what they provide versus maybe even people coming to Benzinga and looking for content?
That's a great question. It's not a think, it's a no, right? Because we
Yeah.
see the numbers here, and it's not every proprietary site that you see, everyone, there's been a reduction in direct organic traffic. Why? Because people now, instead of visiting websites, they go and they ask all their questions on whatever AI provider they see, right? I have a number here that I saw. I think Google's AI overviews have cut organic search clicks. I think it was 42% for publishers versus pre-2024 baseline. 42%. That's an insane number. So really now the game has become okay, what before was SEO, right? That's how you were competing on search engines. Now it's GEO, and how do we optimize our content, right, to be seen in that sense? And the principles are the same, right? So you have to be seen as an authoritative domain knowledge master in those fields, right? So it's really the short answer, John, is producing quality content. Okay, so instead we can't fall in the temptation of, oh, any traffic we want here, we just want to be mentioned. No, we want to be mentioned for what we're experts in. Okay, and how do you do that? Publishing continuously quality content. Okay, so that's a big part of it. When you say, is it better? Absolutely, it's better. Are there risks? So yeah, what we were discussing on trust, right? Because you there's no accountability. Oh, here's a disclaimer, right, on an AI search, but you have to do your own due diligence, right, to research that. But it's definitely better, but you have to take it with a grain of salt. And then from our side as a publisher, the focus continues to be even more on publishing quality content. Okay, that's our calling card, and that's what we got to do. Another key stat here that I have, I think, was zero-click searches where people just do a random search and they don't even enter the website, rose, I think, 13% in general. I went from 50 to 65 or something. So what that tells you is people aren't doing searches the way they traditionally would, and they would search and go to a website. They're taking what they see on the AI summary and then just running with it. So from a publisher side, we have to make sure that we are seen there, right? And again, that all goes back into quality of the content produced.
That leads me to ask the question, is Benzinga trying to drive traffic to its website? And I think the answer is probably both, like to its website as well as uh, populating either leads or content into the LLMs, into these AI search engines now, correct?
Yeah, that's a great question because as a media publisher, a significant or a material part of the business model is ad driven media, right? You, you
Right.
you have ads on it, right? Everybody has that part on their site. So without having that organic traffic, how do you replace that? And the answer is a little bit of both, right? So of course, driving towards having the or maximizing online traffic, that's good, right? But you got to maximize the quality audience that you see. It's not just driving traffic for driving traffic. So engagement metrics, time on the website, things like that. You keep that core audience, but it's really expanding, right? So to your point, yes, we have to be seen more on search engines, but it's really these off-platform sources where we can generate our content, right? So a big part of our business, which is growing, is our data API and licensing, where it's really a B2B to C model, right? So you see Benzinga content on, I'm not going to mention the names here, but the largest brokerage firms in the US, for example, when you go and you research equity names there, as an example, you'll see one of the news providers is Benzinga, right? So it's definitely, we have to think broader now, and how do we touch our audience through different forms?
We talked a little bit about SEO, SEOs in the past. You talk about GEO and content optimization. How does that play in kind of the new mix now or the chaos of what you need to do? And how are you balancing geo optimization with editorial integrity at Benzinga? I'm sure integrity is the highest bar, but how do you balance that with the need to optimize geo?
Yeah,
And for those who in
absolutely.
our audience who don't know what geo is, maybe you can define that.
Absolutely. So SEO, which was search engine optimization, right? That was how do you optimize to be presented on Google, for example, right? And geo generative optimization. So how do you optimize to be seen through the search ChatGPT or whatever platform or Gemini, whatever you're using? And just repeating it, the principles are the same, John. So again, it goes back to being seen as a continuous publisher of quality pieces of information and content that more people go back to. So there's some nuances here and there. I'm not on the technical side of that point, but I know, and the strategy that we adopt is that the principles are the same, and it basically boils down to creating continuously good content. Okay, and by good content, content that people actually use. So we track all our engagement metrics. We track everything that used to see what actually the audience is consuming, right? And that's the big part of it. To balance that point out, I think when we're talking about a media ads and ad media driven business, or at least part of it, there's also a shift into being more selective of the ad partners that you're working with, right? Why? Because it could be a quick shot of dopamine. Oh, we got this partnership here, but that business model is also shifting where people want a lot more performance, right? And if you sign up for something for an ad that can pay you relatively well in the short term, but you won't have a long-term partnership with, that's detrimental. So your audience is that's our goal. So we have to preserve it. I don't want to put a ad that doesn't make sense for them to see in front of them. That would be bad for the audience, and that would be bad for the advertiser that wouldn't get the performance they need to. So the point is there's a mega shift away from the quick cash grab, sort of put it on becoming ads, and really using that side as a partnership to add value to your audience. That becomes a smaller part of the business, and we double down and focus on where our content is being read and the quality of the content that's being read, and making sure that the audience is engaged and really consuming that information to make their investments, right?
Do you find that your audience is consuming content differently than what they were and how they were consuming it prior, maybe prior to AI, or I don't know if there's a shift, another shift that you're seeing?
There's a mega shift, John. There's a mega shift. Before what we saw was people would sit down and they would have more time to process. What we see now is people want more like squawk audio, lunchable content. Okay. There's definitely a
Right.
shift in the longer form content produced to a much more shorter, and people love video and audio where they can listen in and do things, do all the analysis on a platform with their eyes, looking at multiple screens, but also hearing that voice and, okay, this additional piece of information, maybe I can get an edge with this. So there's absolutely been a shift, and this is not with only us, the Benzinga, but we hear right in the market and the industry the shift towards shorter lunchable content, right? That's actionable. The nerdy structural, oh, let me understand what from the macro top down. No, it's people have been engaging a lot more with shorter form content.
And could you talk a little bit about topics as well? There's the length of the content and maybe the format of the content, but like the topics, how are you understanding what topics your audience is interested in?
So I think the moat behind the topics is always going to be, okay, what do I do with this, right? How actionable is this piece of insight? The content that I've seen that has been performing mostly is, what are the specific bottoms up build on equities that are producing signals? Okay, hey, we have an IPO in the space coming along. What are the other public companies that could ride that signal and upward? So that type of content is something that has performed super well. So when we're talking about, oh, the AI equities of everybody going up and everything, but okay, we publish pieces that say, okay, within AI, is it the hardware producers, is it software developers, who is it really that's performing? And then when we identify those signals, saying, hey, these guys have fundamentals that are showing a good entry point, that type of content is something that has a very short shelf life, but very valuable in that short period of time, right? So that type of content we've been getting a lot of engagement with.
Do you have something that, talking about trends, do you have something that picks up on what trends are gaining popularity and then producing content accordingly? I think that's really interesting for investors. If I know that something is, maybe AI is peaking and then it's turning around, I want to know that right away before anyone else does.
Yeah, we have screeners and scanners, right, where you can adopt and build your own criteria to locate those signals, right, and get alerts, automated alerts, and everything. But what has been performing super well is really prediction markets news that we've been. But yeah, we launched this recently, a couple months ago. We launched prediction markets and private market news, right, developments. Private market is still up and coming, but I feel like a big trend that we've been seeing too is on prediction markets, right? People eat that up because there still is a lot of arbitrage to be done, and I think that ideation around it really is a big trend that we've been seeing too. So it's not only from the audience side, even from our distributors, they buy this piece of information a lot. This is something
Yeah,
that's been
got it.
really growing. Yeah.
How should an investor coming to Benzinga, how should they research an investment opportunity? I know you cover public, it sounds like you cover private markets as well. What should they do when they land on Benzinga to do their research? And how does that differ from retail versus maybe accredited investors?
Great question. I think if you, first of all, if when you come on board, right, you have to at least know where you want to play into, right? Because if it, for the ultra beginner, again, we have spoon-fed content that you just follow and you can look at that. But again, that's something that's not who we want to address, right? But it's something to get people started, and it works well to people for people to get engaged, right? But where Benzinga really shines are the next steps, okay, which is generating trade ideas, right? And we have some products that give you this automated in an automated way. Every morning you look at, oh, okay, based on your criteria and your goals, where you want to play in the space, these are some trade ideas, right? And it's not only, it's all house produced content, so it's not like AI generated stuff, right? There are screeners and scanners that go about, but we always put these ideas out based on a specialist, an analyst that publishes this, right? And then all the way to someone who is a prosumer, right? Where we offer the whole platform and they can use the same tools that our specialist uses, they can use the same way, right? So when they first start, I guess just to answer your question, it's great to define where they want to play in the space, okay? Because then it'll be a lot easier to attend to that, okay? And then we can generate more specific ideas tailored to those desires, right? Tailored to the investment objectives and where they want to play.
Got it. So we have, as we spoke about offline, we have a lot of investors in our audience that are high tech professionals. Some are consultants, some are in banking. They have a lot of knowledge of investing. If they land on Benzinga, can they self-categorize themselves and say, I'm sophisticated, I'm accredited, or I know knowledge and I'm interested in X, Y, and Z? Is there that type of filtering mechanism that's available for Benzinga?
Absolutely. Absolutely, John. I'm sorry. Just to answer that back on your prior question too. Yes. So you could link your portfolios. You could not link it if you don't wish to as well, right? You can consume all the data. There's no distribution of this information, obviously, right? But you can link and show all your objectives, and that can filter a lot of the signals that go to you. Okay, things like your portfolio, if you're an accredited investor or not, where you want to play in, things that you don't want to address. What is a signal for you, right? If how many standard deviations you want it to be considered a signal. So there's all that can be specified and personalized to each person. Okay, absolutely, and that's where we really want to shine because again, we feel like we had a few years ago that the discrepancy between the institutional investor and the retail one was a huge gap. And today we continuously develop a lot of products to level even more that playing field. And a big part of it too is born in Detroit, right? I think that's a big part of the culture too at Benzinga. It still is. We're very scrappy. Okay. We engage and we listen to the audience. There's a lot of products that we've developed and features that came through the audience requests. So it's not like a behemoth and we aren't listening. It's always we're constantly hearing out and developing and working together with our audience on what can be improved and innovated on.
Got it. Speaking of private investments, like a lot of what we do at Clive Capital is private investing and private equity or whatnot. How much information can an investor gather if they're on Benzinga on private investing? So private investments, if it's a private company or maybe even like the industry, can you talk a little bit about that?
Yeah, we have some we consolidate some databases on our platform, Benzinga Pro, okay?
Mhm.
But it's not on specifically on the private markets. We do have some data sets around that, but that's not really where the core of the strength is. The core of the strength is really on it's a layer above the raw data. It's on the analysis. Okay. So it's you will get the main names that are coming out within private markets, but always through the lens of the analyst, always through the lens of the person covering that industry. I want to say it's not as wide, but it's a little bit deeper where it is, okay, where we cover. So that's what to expect from Benzinga's private market coverage.
Got it. Okay, thank you for that. Thinking about the market today, like I'm thinking about early this year and kind of the ups and downs of the market. How do you help investors track that market and maybe make the right and best decisions, given that we haven't really seen a market quite like this before? That being said, you could probably say that about other markets as well.
Yeah, that's the hot take right there, John.
Yeah,
Because it's not financial advice, right? That oh, you do this or do that. We're
right.
here to offer the best possible information for the retail investors to make their decisions, right? So, but there's a couple things where we can perform, where we can act that way. So, I guess the first one is again making sure that all our sources have attribution, right? So, why? Because it has to be trustworthy. The second one is
Right.
it has to be timely, right? If you're on top of uncovering something, but it's you're the last one there, then it doesn't matter. Benzinga prides itself in being a breaking news provider. Okay, so trustworthy, timely information. I guess those are the main ways that we help. But also, third is we're not going to leave you alone. You sign up, you come on board, and here you go. It's really we want to hold your hand and engage and show and create the best model for you to make your investment decision. So it's let me call it customer service, right? I think that's the best way to put it. So we aim to be trustworthy, timely, and attend our clients with good customer service. But
Yeah.
that's we could talk all day on that on
Mhm.
market performance, right? Things that change without expecting throughout the year. I think that we have to be everyone has to think of their portfolio in a honestly responsible manner, right? We're never going to be anything like, oh, don't miss out. YOLO, everything, the opportunity of a lifetime, 1000x your trade. No, what we want to do is to create the formula that helps you have a fair advantage of winning consistently. So I
Right.
guess the data that we provide, because we aggregate a lot of data from analysts too, right? And then put our trends and our reviews on analysis on top of it. So I think that the best way to put this out is really guaranteeing that the quality is there, right? And by quality, I mean being trustworthy and timely.
Yeah. Thank you for that answer. Yeah, I look back to when, for example, President Trump announced the Iran war. Knowing that, I think that would be great. If I were an analyst sitting behind a Bloomberg terminal, like you would get that signal, and then as a professional, then you would be able to act on it. As a retail investor, even getting that information, like what do I do? You throw up your hands, you don't really know. A service like Bazinga would be helpful to give at least some kind of direction as to what investors should be doing or maybe expecting. That being said, that's unprecedented, right? There's only so much that historical knowledge that we've had with something like this happening.
Absolutely. No, that you can't predict for that, right? But that's why we pride ourselves. Because there are other media companies where they're always following the markets that are open at that point in time. What we do is we're covering 24/7 the US markets. Okay. We do some international coverage too. That's growing considerably. But the way we've started and really grown is we cover 24/7 the US market. So that's important because you can have breaking news at any point of time, and then we got to make sure that we're quick on the trigger there to make sure that all that information is made available in an actionable format, right? Because it's the retail investor market in the US is really it's at an inflection point. I was reading here in 2005 the retail investors put 302 billion into US stocks, which was like a 50% increase from the prior
Hmm.
year and above 2021 the meme stock peak. And retail trading represented 25% of total market activity, and it peaked in April 2025. So it's seriously huge, right? And we have to attend to this market. And the level of demand and the quality of the data and information only grows. So we have to be prepared to attend to that too. So my point is constant coverage, like we said, 24/7, and being on top to publish everything. When we go to bed, you leave the platform here and you're still looking at things flashing, but it's necessary. You can't predict something like you mentioned, like the war happening. But what you can do is when you structure your portfolio for the good and the bad times, and then you have your secret formula of consistently looking forward for those signals. And what's very important too is the entry point and the exit point too, right? Because what I've seen a lot of people do, even prior in my life, is people can find a really good entry point, right? They cross with the fundamentals are there, the economics make sense, and the technical analysis always also is giving me an entry point signal, but they don't know when to exit, right? They hold on to it forever, and then guess what happens? It fluctuates down, and then they end up exiting, getting greedy, and exiting at the wrong point in time, right? So it all depends on their objective, but I think that's a gap in many traders. I think still have, which is identifying a good exit point, right? When is it sufficient?
Yeah, I love that. Yeah, in real estate, you win on the buy and not necessarily on the sell. But I like that the thought that you have to look at both the entry and exit points in retail investing. Let's turn to the future a little bit far in the future, 5 years from now. I'm
Yes.
interested to know what financial media looks like. We have AI that's going to change things, obviously. Human written financial journalism will likely survive. I'd like your perspective on that. How do you compete against a lot of this either free or low cost AI alternatives that are maintaining, or how do you manage that editorial integrity?
That's a great question. I think that it's going to be ever more important, the verification factor on top of what AI produces, all the information, all the reviews, making sure that everything is in check with the pieces of information that you're publishing. Why? Because everyone is going to have a Claude bot connected to multiple data sources and then coming up with ideas. And so I think that the key difference is who has, right? And that's why I was saying to live one layer on top, because the data is going to become a commodity, right? So, or it already is, to be honest, right? There's a lot of public information that's already commoditized, but it's really that analysis layer. And that analysis layer, there's a couple things. There's the LLM model that you're going to implement and use, but that's only as good as the data, as the history that you trained it on. And that's where I think Vincent is going to continuously offer new content that has the high quality standards that can be used to continuously backtest train these models. So that's a big part of it. How, like, in the next 5 years, what we're doing to prepare, we have three pillars that we're looking into: speed, trust, and distribution. Okay. So these are the things that we're doing to win, right? And all our content is and structure and pipelines are being produced to maximize these factors, right? So speed, trust, and distribution. I think that's what we pride ourselves in. And like speed, what is that? It's not only, oh, publish something very quickly in a timely manner. It's like you have to have the latency on all your distribution channels in check, right? To be able to provide usable data information, right? AI search doesn't beat a human journalist breaking a story in real time. What you're going to win is where you provide that breaking news in a timely manner. And I think trust means every piece of content needs to have human eyes and editorial accountability. So again, everything that's produced, of course, AI assists internally, but everything goes through multiple layers of review and signing off. And then distribution means that it's going to be a more of an infrastructure layer. Again, not written content that you're going to read on a PDF. You're going to probably feed through a webhook or an API onto your a Claude bot, and then have it read and come up with ideas based on what we've produced too.
Got it. Okay. I would also be interested in the economics of that financial publishing change, those financial publishing changes. We've seen consolidation in newspapers, and I would be interested in your perspective on consolidation with financial media, financial information providers as well. And what does that margin compression look like for publishers?
That's a great question, because absolutely there's been it's material efforts going into that space, right? But it's really something that's a longer term trend, and that's why we're talking on financial media to fintech, right? Because the days of it's consumer behavior, it's how people consume the information, right? That's
Mhm.
massively what's changed. And the way you can scale a lot more when you have good distribution, right? And when you're distributing electronically or even directly, right? Like I mentioned, through webhooks or APIs. So I think that the economics of the businesses in that sense, and the barrier to entry is really low, or at least until a few years ago,
Yeah.
anyone with a camera could come up and come up with an opinion and talk about markets and talk about the economy. Today, I think that's not enough, right? So it's going to be the trust factor, which is okay, I put out quality content, all the numbers have accountability, everything that I'm showing, and I have a track record, right? But then today, that's also not enough. Why? Because you have to be able to scale and produce more and better content quickly. So I see this as definitely the barrier to entry is low, but the demand from the clients are going to increase massively, where you're going to push out the bottom, the worst players there. And the ones that are going to survive are the ones that have scale to adapt into a broader distribution format, right? I think you're onto something there. Financial media as is something that's going through a massive trend change and massive consolidation, and the ones that are going to pan out are the ones that can be shift into a fintech model, right?
Yeah, I like that. Thank you for that. I'm looking at strategic lessons from the trenches now, and I'm thinking from an investor perspective, what are some of the biggest mistakes investors are making right now when they consume financial information that you've seen either at Bazinga or elsewhere? Are they trusting too many
I,
sources and maybe consolidating around the wrong ones? And maybe what are some warning signs they should be watching out for?
that's a great question too. When I started in the financial media space before Benzing years ago, something that was counterintuitive to me at the time, I had to digest this idea is if you consume financial media from one provider, the odds of you consuming from another one are higher, not lower. Okay. So they're not substitute products, right? The active retail trader, he looks at multiple sources. He doesn't look usually at just one, right? He has
Hmm.
his favorites, he has his picks, right? But his tendency is to look at multiple sources. Okay. So I think a big mistake that I've seen from retail traders is what's it called? Paralysis by analysis. Oh, yeah, exactly. So it's I have to read 100 newsletters and everything and go and that's a huge mistake I think for retail investors. I think if you have a moat, you have a philosophy, you have a method, and then you apply your method consistently, you're not going to be pulled away by a short-term idea, by FOMO, by getting emotional on a piece of news that's coming out. You're going to have your lens, your filter, your glasses on that use your methodology. And I think being consistent is a big challenge for retail investors, okay, that I've seen. And the most successful ones that I have seen are the one retail investors are the ones that have been consistent throughout their operation, throughout their thesis.
I love that. Consistency is the key. And in terms of applying due diligence, I think it's you have to, as again, as you say, you have to be consistent on your due diligence, the application and how you apply your key KPIs, your key criteria in looking at a particular investment. If you're not consistent, that's always going to be a failure, or you're not going to be able to make a decision. So it makes a lot
Yeah,
of sense.
don't fall into the FOMO, John. That's what I see a lot of investors getting emotional. It's be good at identifying and executing on your exit points. I think that's a big, like we were talking before, because they hold on too long to some things past. Oh, no, it's going to come back. No, I see more potential. If you have to look at it with fresh eyes always at your position and say, okay, today does this investment make sense? Not,
Yeah,
oh, it's already 280%. I'm 280% up. I wanted to reach 300. Then I'll exit. No, why? If the fundamentals justify, then I'm the first one to say hold on to it. But having that new, refreshed idea of looking at things, of looking at your assets, your portfolio holdings, and identifying the right moment to exit is crucial.
FOMO and also analysis paralysis that you brought up earlier. Obviously, you're an information provider. There's a lot of information out there. And how does an investor digest all that information? They have to have an investment philosophy, right, in their buy box. But how do they digest all that information and then quickly make a decision? How do you think the best investors do that?
I think it's separating signal from the noise, right? That's that, and that is art and science, right? I think there's a couple of practical pillars I've always noted here, which is look for the primary source attribution, right? Any financial content should trace its claims back to press release, SEC filing, earnings call, or verified data source. I think second, check for recency and specificity. AI systems are often trained on data with a cutoff. So they'll give you confident sounding answers about things that have already changed, right? Because it's prior to cutoff. So that's a big point in cutting through the noise and identifying the signals. And third is trust distribution over any single channel. If you're getting your investment thesis from one AI chatbot, you're taking on a concentration risk on your information diet. Let's put it that way, just like you would in your portfolio. So my point is, take a broader look at things and see if there's not a bias from the specific agent that you're looking through. So I think that's a good way to cut through the noise, right?
Got it.
Look at if the information is trustworthy, if the recency of it, if is it timely, and third, don't get stuck on depending concentration risk on only one agent, only one bot, only one piece of news source. I think you have to look at even internally when we write content, there's the analysts, the journalists, they don't always agree on things, right? But we cover, it's important to have that debate and discussion on what should be covered, how it should be covered, how it should be presented, right? But that's a big part of it too, is that's the art part, right? Of where there's not only one way to look at a piece of news.
This next section is about actionable takeaways for our audience. I know we're getting on the top of hours, so I want to leave some actionable takeaways for our audience. One is obviously, if we're looking at either public investments or alternative investments, what's one change that investors should look at making this month or right away to improve how they source investment information? Is it switching to fewer vetted sources, starting a reading habit? Should they, and then like how much money and time should they spend on research?
That's a great question. Opinionated opinion here, right? Because there's
Right,
multiple
right.
methods, right? Each person's going to have their own formula. But again, at least my observation with the best retail investors that I've seen, that I've heard of, that I've studied, consistency was one of the main common factor among all of them, right? I think that's the consistency in whatever formula you do. That's number one. Number two, and consistency means the habit, right? Doing the research, be it 1 hour, 30 minutes, 10 minutes, being whatever it is, but you be consistent in that format. The second point I think is, again, you said it yourself, right? Is having fewer but vetted sources. I'm not saying having one, but I'm saying having the ones that you trust, and always trust but verify everything, right? I think that's a big part too. I think the third one that I'd mention is removing your emotions, and that comes through method, right? How is your approach scalable or not, right? You have to have a scalable approach so that you're not one and done, you have that benefit. So I think those three. The other one that I would add is stay with your style. Don't try to only copy, emulate, because you're only going to be second best at that versus someone else. So I would say identify what works for you and improve upon that.
Got it. Love it. Okay, we're at our standard closing questions. One is describe some challenges or failures you've had in your career and what lessons that has taught you that might benefit our audience.
Sure. I'll mention this, but this is professionally, right? Not necessarily as an investor. When I started my career in corporate finance, I was really good with numbers analysis, right? At really digging into data and consuming large amounts of data and seeing what the causes were. I wasn't so good at communicating that upwards, right? And
Mm.
I hit a ceiling in my career. My quantum leap came when I took a bunch of steps back and retrained myself on how to excuse me, on how to become a better storyteller with the data I had. Sometimes the data itself is not going to be sufficient to convince someone, right? But the storytelling will be. So my point is know what to show when, and it's the 80-20 rule, right? So how do I get 80% of the result with 20% of the inputs here? And that's a lesson that I had to learn. It was hammered into me professionally. But then I carried out through my life, even with investments, right? You're not going to win every bet that you place. You're not going to win every one that you place, but know that build your methodology around that you can win at a majority of the time at least. Okay. So
Got it.
that's something that I would recommend is distill things to their key factors, key principles, and then act from those. And leave the bell curve room to make mistakes and learn, right? But that your median there, your average is centered on you winning, right?
I like that. This might be the same answer, but if you could go back 10 to 15 years to a younger version of yourself, what advice would you give that younger version, knowing what you know now about financial media, technology, investor behavior?
But no, that's a great question because when I was mentioning mistakes from retail investors, I include myself in that. Okay,
Yeah, yeah.
so my recommendation would be you don't be less anxious and less is more. Okay, so focus on the vetted sources, the vetted information, the vetted factors that will help you grow in whatever it is, right? In life and in business and investing. So that's a piece of information I would have given myself is be less anxious, focus on what's important.
Like that. For those who are just getting started in investing or financial research, what do you think is the greatest misconception or falsehood that they should watch out for?
Oh, for who's getting for who's getting started out now, that's very easy, which is you shouldn't be investing if you have debt, you shouldn't be investing if you have expensive debt, let me put it that way. And if you don't have a reserve, right? So by that, hey, if you're unemployed, do you have a reserve to fall back on? If you don't have those, then you shouldn't be investing. But let's say you do. The first part I would recommend is always build your portfolio steadily over time. Please don't. Oh, I now Bitcoin's a trend. YOLO into Bitcoin. Now it's SpaceX IPO. No, no, please don't do that. Build your portfolio like a pyramid, right, from the bottom up. So a little bit of what are my objectives, what, and then what are the key tools, ingredients for me to obtain those objectives. So don't be chasing the trend. Build it independently or with advice, but from the bottom up. That's for who's starting. I think that's the easy one. to answer.
That's great. This last question, how do you give back to your community and what causes or organizations matter most to you?
Wow, I love that. That came out of nowhere, but I
That's the
like that
only.
question. Yeah. Giving back is a big part of life to me in general, right? So I've always helped the privileged kids in my community, my neighborhood through different initiatives, but that's more of a smaller section. Within Benzinga, we on our website, we do have, again, a lot of content revolving around financial literacy and education, right? That's very important to me too. Of course, there's a business model around everything, but those pieces, I don't look at the ROI. We look at those as forms of giving back as well, right? And one thing that I think we need to, as a society, give back people who are in privileged seats and situations is in terms of education, okay? So I've been dabbling and chatting with other executives on how we can. It's not money. It's how do we get this group of kids to learn to become more financially literate so that they're independent in making their smart decisions. So that's something that I'm still building out. But it's funny you touched on that. I didn't tell you anything. That's another side project I have being developed. More to come on that, John. We'll touch base in a few months, okay? But there's something being developed there.
Sounds good. Looking forward to hearing more about that. That's all the time we have today. Thank you very much for the excellent conversation, Robert. We've covered a ton of ground today, from how AI search is disrupting financial media to how you can protect yourself as an investor by looking and research and really getting a lot more information. For those interested in learning more from either you, Robert, or Benzinga, how can investors find out more and get in touch with you?
Absolutely. So I like building bridges, John. So I make myself available. My email is robert@benzinga.com. Feel free to reach out to me through email. I'm available on LinkedIn too. And I like building bridges. So if anybody wants to, oh, I want to talk about corporate finance, the door's open. If you want to talk about investments, the door's open too. So whatever it is, I make myself available. And the other part too is I invite everyone to go on the site, but really to become independent thinkers in terms of investing, right? I guess that's the audience, but to continue building up that muscle because it's a form of really, it's a means to an ends of more freedom, John. That's what it
Right.
is. For those who want to reach out to me, my door is always open.
Thank you very much for that. We'll include Robert's contact information in the description of this podcast episode, along with any resources you might have mentioned. Don't forget to like and subscribe to our podcast on whichever platform you're listening to, so we can make sure we can continue bringing you the best educational content on alternative investments and wealth building. Thanks, everyone. Until next time, keep learning to invest for generational wealth. Robert, thank you very much.
Pleasure. Thank you, John.
Okay.